I want rock and roll. All right, give it to me. We love rock and roll, and we love stocks, options, and dividends. Checking in here. It is Tuesday. Already Tuesday? Yeah, I remember yesterday. It was a holiday. Very good holiday. It is Tuesday, May 30th, 2023. Had a great long weekend. I think I told you Thursday night we went out with friends of ours, Kevin and Holly. Friday night, out with my lady friend, my side chick, aka, my wife. Saturday, over at my brother's house, he had a little cookout for Memorial Day. And then yesterday, we were over at our friends Casey and Jeff's house up in Chesterton, Indiana, which is the next town north from Valparaiso. Over at their house, a couple other couples there for a little pool party / cookout. So good time had for all. We even had the old Foxy out, the 1991 Mustang GT convertible. Drove that over to Casey and Jeff's. That was always fun to have that around. With the top down, I'm being distracted as I'm looking over at the Big Mac over there. S&P 500 and the SPY. The SPY is heading downtown to Chinatown, 419.74 as we speak. So according to the Bollinger Band I have set on it right now, it is trading under the moving average of that Bollinger Band. What else? What is this? What do I have this set at? Hold on. Under the 20-day moving average? I don't know. That can't be right. Yep. So here, just checking in. Obviously, first trading day of the week. 2 days. 2 days remaining in May. Tomorrow, I'm not sure if I'll be able to do anything because we're going to be heading out to Wrigley Field early. Want to get there for, batting practice. Going into the old Cubby Bear and some of the surrounding bars prior to the game, plus also catch the batting practice. Cubs versus Tampa Bay Rays. So that'll be a good time. But I have some calls to sell that I think we'll be able to put on the board, starting with Ford. And Ford, over at the old Alpha Spread, they tell me that Ford has an intrinsic value of $24.20. Not sure about that. Over there at Simply Investing, they're calling Ford undervalued. I would for sure agree with that. Our friends at Bar Chart, they're like, I don't know. It's trending to be a weak sell, but we're not sellers of it. We hold 300 shares. We've had a nice special dividend surprise earlier in the year. We look at dividend yield theory, okay, and you see that the 4-year average of Ford is 4.16%. So if we take their annual payout of 60 cents, right? 60 cents, and we divide that by 416. So 60 cents divided by 416, which is the 4-year dividend yield average, that gives us a price of $14.40. So dividend yield theory suggests that Ford is currently undervalued and it should be around $14.40. Well, we don't know. We just know we have 3 contracts worth of calls that we can sell. I was looking 10 days out, a very conservative $13.50 on the strike price. And I know it's only $6 or so times 3, but that's just money in the bank on top of the dividend, right? So there's $18 that we can put in our pocket in 10 days. And I know that's not a big return, is it? It's not a big return, but what is it exactly? So it's 18. Let's do this. It's 6 cents divided by 13.50, right? Divided by the 10 days, multiplied by the 3, 6, and the 5. That's 16.2% on a company like Ford. I'll take that on top of its current dividend yield of 4.96. So it's messing around with the 5% number. We don't have an upcoming ex-dividend date, but I do have a payout date coming up. So I've got some dollar bills coming my way from Ford. And then earlier in the year, first quarter, we had that nice surprise. Thank you so much for that extra and that special dividend. So on March 1st, I was paid, 65 plus 15, that's 80 cents. I was paid 80 cents a share for one quarter, which is more than they pay out for their normal year. So I liked that a lot. So we've got that on the board. What else do we have to look at? We've got some AT&T, Verizon, Intel, Walgreens, Devon Energy, which probably won't be today. Energy down across the board. We've got Valero Energy. We have a Coca-Cola call option. We've got some VF Corp, two of those contracts we can sell. Philip Morris and Runway Growth is not a good company for selling options. It's a great company for collecting dividends, but no good, no bueno on selling options. Johnson & Johnson, we have one. EOG Resources, we have one. And then we have two PepsiCos, which Pepsi's down again. So I actually might buy more Pepsi today. I might buy more Target. Oh boy, Art, are you serious? Are you a glutton for punishment? I am. I'm a glutton for punishment on certain companies. Whoa. Target now for sure under 52 week low. They're at 133.99. So I'm going to take a close look at Target. And I know it's political right now and you may not like it. And it could be that the politics of it puts a downtown to Chinatown slant on Target for, who knows, a foreseeable future. But the intrinsic value and the dividend yield theory suggests that this is incredibly undervalued right now, the Target. So we'll take a closer look at that. I'll probably buy some more and sell some calls on those. We bought some on Friday, and we were buying them at $1.38 or 138, and now they're under 134. So we might need some more of that, and then we might have to sit with that trade or that hold that for a while as we trade options and collect dividends. But I'll definitely have a specific spreadsheet to track Target to see if that turns out to be a good investment or not. And I know over time it will. Like back in the day when I used to buy all of my rental properties wrongly. Is that a word, wrongly? I would buy them just, not great. I was just doing whatever I could to put some investments together. But over time, every single one of them became a very good investment because we held them over time. So they appreciated, rents went up, debt went down, debt ended up being eliminated, and every single one of them became very good investments. I feel the same way about Target over time, and it may turn out to be even shorter term. It becomes a good investment. I shouldn't say short term, because short term it could end up looking like a very bad investment, but in the mid term to long term, I would imagine it's going to be a good investment. And look, as we sit here and talk, I missed a very good opportunity to get in under 134, but I'm looking over at the Big Mac and I see the market is gapping green right now as we speak. So I wouldn't imagine it's over today before this comes back down, possibly touching into the 133s again. So that is our first check-in. I'll be back soon. We'll talk more about Target and some other trades that need to be made. Hopefully we'll be able to get some Verizon, AT&T on the board as well on the call side. So see you in a few. Thank you for shopping here at Target.